If I opened your banking app right now and turned your last 5 years into a simple line on a graph, what story would it tell? Would I see a clean uphill climb or a flat, stubborn line with tiny bumps where pay raises came and went? Be honest. If the line looks flat, does that mean you're lazy? Or does it mean the system you are handed was designed for a flat line? Here's the truth that nobody tells you in school. You are not lazy. You're exhausted from pushing a heavy cart on square wheels. You've been rewarded for showing up, not for moving forward. And every time you tried to sprint, the road tilted against you. Interest, inflation, expectations, and a social circle that prefers the comfort of sameness to the discomfort of growth. You don't need a new personality. You need a new playbook. Let's start with the feeling everyone is afraid to admit. You look around and think, is this it? Same job, same rent, same commute. You have moments of ambition, flashes of clarity, bursts of motivation at 1 a.m. when you're sure you'll turn everything around in the morning. Then morning comes, and 1,000 tiny frictions trip you before breakfast. By evening, your goals feel like a joke. That cycle can trick you into believing you're a person who doesn't follow through. But that's a lie. You follow through every day on your current defaults. Without a better system, you are loyal to whatever is easiest in the moment. That is not laziness. That is physics. Here is the map out. It's not complicated. It is demanding. Think of your life progressing through 5 phases. You don't sprint through them. You move with intention. You will recognize yourself in the early phases. You'll feel a pull toward the later ones. As you listen, imagine the next 7 days in your life, not a fantasy life, your actual calendar. The sooner you connect these ideas to Tuesday night and Friday morning, the sooner the flat line begins to bend. Phase 1 is the lull that feels like home because it's familiar. Stagnation. It's not dramatic. It's quiet. You clock in, you clock out. You try to be responsible. You avoid risks because risk feels like danger, and danger feels like losing everything. You make just enough to feel like you can't start over, not enough to feel like you're ahead. If you linger here too long, you become a professional juggler of bills. You get paid, and most of the money is already spoken for. Rent, car, phone, groceries, subscriptions you forgot you had, a surprise fee that appears like clockwork. The scariest part? The flat line starts to feel normal. People around you nod and say, that's adulthood. Meanwhile, prices rise. Your paycheck crawls. You work harder and wonder why the water still feels like it's up to your neck. Let's name the 2 invisible forces that keep you pinned. The first is inflation. It's the background hum of the economy. Even when it's low, it's never zero for long. That means that a dollar that sits still slowly becomes a smaller dollar. If you park your money in a way that doesn't grow faster than prices, you are quietly moving backward. The second is the cost habit creep. As soon as your income rises a little, your lifestyle expands to hug the edges. A nicer takeout, a phone upgrade, a slightly better place. Nothing crazy, just treats. You tell yourself you deserve because you're tired. At the end of the month, the number left over looks suspiciously like last year's number. That is not a moral failure. It is exactly what the system expects you to do. So, what do you do in this phase? You don't try to fix everything. You build your oxygen mask. You need 2 moves that give you breathing room. Move 1 is ruthless clarity. Track where every dollar actually goes for the next 30 days, not forever, for the next 30. You will be shocked by how many small leaks add up. You are not trying to shame yourself. You are trying to see. Once you see, you automate. The moment money hits your account, a small slice moves itself to places future you will thank you for. An emergency account and a basic investment account you'll feed later. It's not sexy. It's survival. Move 2 is dealing with expensive enemies first. If you have high-interest debt, treat it like a leaking roof over your bed. Everything else waits. You pick a payoff plan and automate extra payments. That extra payment is not a suggestion. It fires without your permission. You might be tempted to argue that saving a little is pointless. That is your exhaustion talking. Automation is not about the amount at first. It is about identity. You're teaching your money to behave without your constant supervision. Even your game console knows to auto-save your progress. Why is your financial life still manual? Phase 2 is the spark, ignition. Most people never get here, and not because they're incapable. It's because ignition creates friction with your environment. The moment you start changing, two things happen at once. You feel new energy, and your world pushes back. Your friends may not be bad people. They're just used to a certain version of you. Your upgrades force a choice. They can grow with you, or they can pull you back down so nothing has to change. It's easier to tease you for leaving early to work on your project than to question their own choices. Expect that. Plan for it. Don't resent them. Build a new circle in parallel. At the same time, your money habits evolve. You learn that sitting on cash is comfortable short-term and corrosive long-term, so you begin to split your dollars into jobs. Cash to protect, assets to grow. This is where people get stuck because they think starting small is pointless. It's not. Starting small is the only door you have. If you invested a one-time $5,000 and never touched it again, history shows that long-term stock market growth, imperfect, volatile, but upward, could turn that into many times more over a couple of decades. That's not a promise, it's a pattern. Yet most people never see the pattern because they never put the first dollars on the field. They keep the money in a savings account that feels safe while inflation shaves it day after day. The numbers in your app don't change, so your brain thinks nothing is wrong. But the groceries get more expensive. The rent creeps up. That's how value evaporates without a sound. Ignition requires a simple rule. Get your money growing without needing your mood to be perfect. That means automation again. You set a recurring transfer into a broad, low-cost investment fund. You don't try to guess the best day of the month. You pick a consistent day and stick with it. You also build a brand new habit around your phone. When you have the itch to buy something out of boredom, you delay by 10 minutes and ask one question. Will I still want this tomorrow if it costs 30% more because I'm paying with future me's time and freedom? Half of your impulse buys will not survive that question. That is your first real raise. Ignition is also where you make your first difficult social decision. You can still love your friends. You can still go to the same events. But you need voices near you that talk about building, not just consuming. Find 3 people who are obsessed with improvement. They don't have to be rich. They have to be intentional. Reach out. Offer value first. Ask smart questions. When you're the least experienced person in a conversation, you grow faster than you realize. You're not ditching your past. You're adding your future. Phase 3 is where things get loud in a good way, acceleration. This is where your foot actually finds the gas pedal and stays there. The idea is simple. More cash flow in, more intentionality with who you know, more courage in your choices. Call them the 3 C's because it's easy to remember when you're tired. Cash flow, connections, confidence. Cash flow first. You need a steady stream of incoming cash that isn't chained to one employer's decisions. Not tomorrow. Not magic. A practical second engine. The fastest engine to build is a service that solves an obvious problem for a specific kind of customer. Keep it simple. Local businesses need content, ad management, basic websites, appointment scheduling automation, customer reviews handled, email newsletters written, videos cut for social media, data sorted. You pick one. You choose a small niche so your message is sharp. You craft one offer. with a clear outcome and a clear timeline. You price it in a way that makes it an easy yes. You build a ridiculously simple prospecting routine, 10 outreach messages a day, every day, no perfect logo, no fancy brand. Just consistent offers and reliable delivery. Your first client is not your dream client. Your first client is proof your engine turns on. As money starts to flow, the temptation is to inflate your lifestyle. Don't. Inflate your runway. Set a rule. For the first 3 months of your side income, 70% goes into your emergency fund and investments, 20% into growing the engine, 10% into guilt-free fun, so you don't resent the process. You are buying time. You are buying options. You are buying the right to say no to bad deals later. That is power. Connections are your second accelerator. You know the saying about becoming the average of the 5 people closest to you. It's a cliché, because it is relentlessly true. If everyone around you treats money as a taboo and growth as a threat, you will sabotage yourself to keep your membership. You can keep your old room and still visit a new room every week. That's how you change your average without becoming a stranger to yourself. Start small. Send one thoughtful message a day to someone you admire. Comment intelligently on their work. Ask one question that proves you did your homework. Offer to help with something small. Over time, you'll have a list of people who don't roll their eyes when you talk about goals. That shift alone is worth thousands of dollars you cannot see yet. Confidence is the third accelerator, and it doesn't come from affirmations alone. It comes from exposure and results. You train it like a muscle. You'll want a plan that forces you to collect small wins in public. A 100 reps challenge works. 100 micro actions that scare you a little. 100 cold messages, 100 short videos, 100 product demos, 100 portfolio pieces. You track it visually. You celebrate completion, not outcomes. Confidence grows when your nervous system realizes you can survive discomfort. Every time you keep a promise to yourself, your identity moves an inch. Keep enough promises, and one day you wake up and realize you don't negotiate with fear the way you used to. Now, we arrive at phase 4, the one that turns motion into wealth, expansion. You're done trading all your time for money. You begin transitioning from income to assets. Assets are anything that put money into your pocket while you sleep or appreciate while you live. Liabilities are all the beautiful traps that feel like upgrades but quietly drain you. The car that depreciates faster than your pay rises. The bigger apartment you barely use. The gadgets that add monthly bills. You already know this. Intellectually, expansion is where you practice it clinically. Which assets? Start with the ones you can understand and control. A simple, low-cost stock market portfolio built on broad index funds. A rental property when the numbers make sense and you have reserves. A small portfolio of dividend-paying shares if you want cash flow while you hold. Most overlooked of all, the skill stack that increases your earning power year after year. People roll their eyes when I call skills an asset. But the most explosive returns I've seen came from learning something the market values and then compounding that skill with reputation and relationships. Code, copy, video, data, design, sales, operations. Pick one. Get good enough to be undeniable. Then layer a second skill that amplifies the first. How do you choose between spreading out and doubling down? There are 2 valid paths. Diversification is the path of known protections. You own a little of many things so that no single failure ruins you. You rebalance periodically. You sleep well. High conviction is the path of known risks. You learn one domain deeply. You bet bigger on fewer plays because you actually understand what drives them. The upside is faster compounding. The downside is more volatility and the possibility of being wrong in a loud, expensive way. Which path is right? Early on, default to broad diversification so you don't die before you get good. As your competence grows, you earn the right to tilt toward conviction with a small slice of your portfolio. Not because a billionaire did it, because your knowledge justifies the tilt. Expansion also demands better systems. You set up automatic investments on a schedule. You decide your target allocation, and you rebalance once or twice a year with new contributions, not panic selling. You track your net worth monthly, not daily prices. You use a short checklist for major purchases. Will this appreciate or cash flow, or is it just cool? If it's just cool, can you rent it, borrow it, or delay it for 30 days without hating your life? You put a speed bump between impulse and action. You let your future self make expensive decisions, not your tired end-of-day self. Eventually, if you keep going, you enter phase 5, mastery. This is not a number in a bank account. It's a state of options. Your assets pay your baseline life. Your calendar is heavier with your choices than other people's demands. You say no, and nothing breaks. That's freedom. Mastery is not retiring to a beach and forgetting how to be useful. It's deciding what matters and spending your best hours there. It's teaching what you've learned to people who are a few steps behind you. It's building systems that last when you take a week off. It's moving from growth at all costs to growth with wisdom, protecting the downside, guarding your attention, pruning obligations that don't fit the life you spent years building. If you think giving back is a luxury for later, you misunderstand how compounding works for reputation and meaning. The people you help at the beginning of their journey become your collaborators, your referrers, your friends. They keep your edge sharp. They remind you of the trenches. They make mastery less about isolation and more about elevation. The wealthiest, most fulfilled people I know treat generosity like an operating expense, not a seasonal donation. They invest in people the way they invest in assets, early, consistently, and with a long horizon. Now, let's talk about the word that scares ambitious people into a corner: risk. You've been taught to fear risk like it's the villain in the story. In reality, risk is just variance plus time. Short timelines make everything look terrifying. Long timelines reveal patterns. When you look at your life on a 1-week scale, a bad day feels like doom. On a 10-year scale, a bad year feels like an expensive lesson. There are reckless risks, betting the rent, chasing hype, trading on emotion. There are calculated risks, allocating a small percentage to a bold idea you have studied, moving to a cheaper city for a year to accelerate savings, taking a job with lower pay and higher upside because you will learn from killers. Learn the difference. Only take as much risk as you can sleep through, then go to sleep. You may be wondering, why am I talking about mindset while you ask for tactics? Because you cannot keep tactical promises with a mind that believes you're lazy. Today, consider a new identity. A person who builds tiny systems that run bigger than their moods. When you adopt that identity, the tactics you already know suddenly stick. Tracking expenses sticks. Automating transfers sticks. Saying no to the party you can't afford sticks. Doing 10 minutes of your side hustle on a night you don't feel like it sticks. You are not fighting your willpower. You designed your environment to make the right move the easy move. Let me give you a set of scripts for the exact moments you tend to stumble. When your friend mocks your new routine, say, "I'm experimenting for 90 days. If it makes my life worse, I'll stop. For now, cheer for me." You set a boundary and a timeline. When you want to buy something you didn't plan, say, "If I still want this in 30 days, I'll get it. Today I buy my future." You don't say never. You say not yet. When the market dips and your stomach flips, say, "My horizon is 20 years. Today is just a dot on the chart." You zoom out. When your first client ghosts you, say, one no closer to 10 yeses. You quantify rejection so it feels like progress. These little phrases keep your inner saboteur from grabbing the wheel. I promised this would be a professor's lecture built to hold your attention, but lectures without homework are entertainment. You don't need entertainment. You need motion. Tonight, not next month, do 4 things that take under an hour combined. First, log into your bank and rename a savings account to Calm. That is your emergency fund. Move $20 there. If you don't have 20, move 2. Buy the identity, not the amount. Second, open a basic investment account if you don't have one and set a $5 weekly auto invest into a broad, low-cost index fund. The number is not the point. The automatic action is the point. Third, list your debts with balances and interest rates on one sheet of paper. Circle the highest rate in red. That's your target. Set a recurring extra payment of any size. Fourth, send 3 messages to people who are doing what you want to do, not fan mail. Useful, short, respectful messages. I loved X, I tried Y, and got stuck at Z. If you were me and had 1 hour a day, what would you do? You will be astonished how many doors crack open when you knock with humility and effort. Tomorrow, spend 15 minutes building a tiny offer you can sell this month. Don't overthink. A 1-page PDF explaining your service and a 2-sentence pitch. Offer to run 5 free trials in exchange for testimonials, then charge a low first month rate to turn it real. You're not trying to make $10,000 by Friday. You're trying to build the engine that can earn $1,000 a month consistently. With that engine, your investments stop being symbolic. They become substantial. Over the next week, audit your subscriptions and recurring costs. If you cancel 3 and redirect that exact amount into your auto invest, you'll barely feel the difference in lifestyle, but you'll definitely feel the difference in momentum. Put a sticky note on your laptop. I pay me first. Every paycheck, even a small percentage, goes to future you before anything else. You wouldn't let a landlord wait for rent. Stop making your future self wait for their share. As you move through these phases, expect your emotions to lag your reality. You might be doing everything right and still feel behind. That's because you lived on the flat line long enough that your nervous system expects disappointment. Give it time. Keep the promises. Build streaks. Create visual proof of progress. A simple chart on your wall, a habit tracker with boxes you fill, a monthly net worth number that starts microscopic and grows. The goal is not to impress anyone. It's to turn progress into a sight and a sound you can't ignore. Let's talk about the cultural script that whispers in your ear every time you try to reach for more. Money doesn't make you happy. Of course, money alone doesn't, but lack of money reliably buys stress, limits, and resentment. Money is not a trophy. Money is a tool. Tools extend your reach. They buy you time with people you love. They buy you choices you didn't have. They buy you margin so one mistake doesn't ruin a year. They buy you the freedom to be generous without running numbers in your head. You don't need to worship money to respect what it can do. The fastest way to become miserable with money is to spend it trying to prove something to strangers. The fastest way to become peaceful with money is to align it with what you actually value and automate it, so you're not negotiating with your impulses every day. You may also be thinking about the larger system's debt climbing in the headlines, the trend toward renting everything instead of owning, a sense that the game is rigged. Some of that frustration is justified. Ownership has been drifting upward into fewer hands. Subscription culture can turn your life into a series of monthly fees. But here's the lever you do control: what you own, what you rent, and how much of your income goes to assets versus appearances. You can't rewrite the entire economy, You can rewrite your personal economy. You can choose to be an owner more often, a small, consistent investor in broad assets, a buyer of fewer, better things that last, a builder of engines that aren't cancelable by a boss. That choice will not show up in a headline. It will show up in your life. At some point, someone will ask whether you're scared to take these steps. The honest answer is yes. Do them anyway, scared. You don't have to become reckless to become bold. You can cap your downside on almost every move. You can keep your job while building your engine. You can invest small while you learn. You can protect next month's rent while you pursue next decade's freedom. Courage is not the absence of fear. It's the refusal to let fear pick the strategy. If there's one image I want you to walk away with, it's this. Imagine your financial life as a flywheel. At first, it takes enormous effort to push. You get half a turn and your arms burn. You don't see anything happen. You push again. A quarter turn. It feels pointless. Keep pushing, and something magical appears. Momentum. You nudge it, and it keeps moving. You nudge again, and it spins faster than seems fair compared to the force you're applying. That is compounding in a nutshell on money, on skills, on relationships. Flat lines are flywheels that never got enough pushes in a row. If you can muster 90 days of consistent pushes, you will feel the wheel move. If you can muster a year, you will not recognize your baseline. If you can muster 5, you will be running a different race. Let me make this even more practical. The next time you get paid, run a 6-minute routine that runs your life better than most apps. Minute 1. Check your Calm account and confirm you've added your weekly amount. If your emergency fund is funded, that money goes to investments. Minute 2. Your auto-invest happens. You look, but you don't intervene. Minute 3. Pay your highest interest debt more than the minimum. Minute 4. Transfer your side hustle earnings into their buckets, most to investments. A slice to growth, a slice to fun. Minute 5. Scan your calendar for one block where you'll do revenue-generating work. Protect it like a meeting with your boss. Minute 6. Send one message to a person you want to be like, offering something small. That routine, done every pay cycle, will outpace almost every complicated system you've ever tried. When should you expect to feel different? Fast. When should you expect to look different on paper? Slower than you want. That's fine. The better question is, how long until this becomes who you are? The answer is shorter than you think if you stop negotiating with your plan. It's not what you do on your best days that changes your life. It's what you still do on your average days. Before we end, let me ask you the question I wish someone had asked me years ago. Are you actually worse than millionaires? Or did they just start treating their money like an employee earlier than you? They set up automatic orders. They focused on assets over applause. They learned boring skills that compound quietly. They bought ownership where they could and rented dopamine when they had to. They were not superheroes. They were consistent. If you imitate anything, imitate that. So here's your fork in the road. Option A is the familiar flat line, comfortable and predictable, with occasional spikes of stress and short bursts of "I'll change." Option B is the messy upward line with dips and detours, new friends, new habits, a flywheel that starts slow and then hums. If you choose B, say it out loud right now. Yes, out loud. I choose the messy upward line. Then prove it with one action before you sleep. Rename the account. Move the money. Schedule the auto-invest. Send the messages. Cancel the subscription. Set the rule. Small actions at the edge of today create a different horizon for tomorrow. 3. Set a timer for 10 minutes. 2. Pick the smallest step from this talk and start it. 1. Be the person who doesn't wait for perfect motivation to build a better system. You are not lazy. You are ready. And starting tonight, your graph learns how to bend.